One of the most important skills you can learn in the land business is negotiating. Now, when I say negotiating, I'm not talking about arm twisting or being salesy. I'm talking about how do we figure out how to create true win-win scenarios when we work with sellers. The truth is, most property owners know exactly what their property is worth. Really what they're looking for is speed, certainty, and what I call hitting the easy button. And so it's our job first and foremost to make sure that we're working with sellers that actually have that need. Now, when you're first getting started in this business, it probably feels impossible to generate leads, but I promise you that quickly becomes the easiest part of running a land investing business. The real secret is, how do I find the right leads? And then once I find the right leads, how do I spend time with them and negotiate properly so I can turn a good deal into potentially a great deal? And really put simply, good negotiating is just figuring out what a seller's problem is, solving it, and making sure the numbers also work for you. And that's literally what a win-win situation is. And that brings us to principle number 1, and that is anchor low with confidence. When you talk to a seller out of the gate, they're always gonna give you their most unrealistic offer. And frankly, you should do the same. One of the worst things that you can do is feel scared to make a bold offer out of the gate. They're gonna start way too high and you should start way too low. But what most investors do is they wanna make a good impression, and so they end up anchoring themselves at a number that might be impossible for them, or even if they can do the deal at that price, it gives them no wiggle room to allow the seller to feel like they beat them up in the negotiation. What do I mean by that? They wanna feel like they beat you up. They won in that dynamic. And so you've always got to keep a buffer in the numbers that you give. If you don't, more than likely, you're going to have what I call seller's remorse, or worse, they'll try to back out of the deal a day after signing. So the premise here is start low, understand that you're not married to that low price. You'll more than likely have to bid yourself up. And when you understand that this is not the end all be all offer, you're able to make it with confidence. The rationalization for me is that the seller's starting too high, I'm starting too low, we're playing the same game. But the difference between our offer and the seller's offer is that we're actually gonna back up our offer with math. You see, oftentimes sellers say, hey, I want $1 million for my 5 acre. And when we press them on, well, can you show me the work on how you came to those numbers? They have nothing that they can give us. On the other hand, when we make an offer, even if it's low, I'm gonna actually explain all of the logic behind how I came to the number that I gave them. What I teach inside of LIA is I say, look, when you're making an offer, it's the same thing that your elementary school teacher used to tell you on a math test. When you were doing a math test, you couldn't get the answer right without showing your work. So show your work, break it down, make it very clear to the seller on how you came to your number. Principle number 2 is probably the easiest thing to do, yet it's the hardest for most to follow through on, and that is the fact that silence is your best friend. You see, when you start low with that anchored offer, I need you to make the offer, give a little bit of context on how you got there, and just be quiet. Where a lot of people go wrong is that they make this offer and they're so nervous to make it that they want no silence. They want to fill the vacuum. If you allow the seller to sit in a little bit of discomfort, you'll see that more times than not, they're going to reveal their true colors. They're going to say something like, well, I'd have to talk to my husband, or I'd have to talk to my wife, but I'll think about it. Now, if we got in the way of that, more than likely we're just going to shoot ourselves in the foot, and we're never going to get them to actually share any signals with us that they might be interested in that low offer. One of the principles that was taught to me is that in negotiations, whoever's willing to sit in discomfort the longest typically wins. Because more than likely you're a trained professional at this point in terms of how to negotiate. You're going to be more likely to sit in that discomfort than the seller is, and so wait it out. In some cases, that might be a 30-second or a 60-second pause. Sure enough, the seller will come in and they'll usually reveal something important in terms of your next step. Now, principle number 3 is something that was actually never taught to me when I first got started in this business, and I've frankly probably lost hundreds of deals because I never gave sellers options. You see, when we deal with sellers, all I'm looking for is what I call the 3 whys. Why do you want to sell now? Why haven't you sold before? And why not list yourself? Now, through those 3 whys, I'm just trying to unearth a situation where a seller's raising their hand and saying, hey, I've got some motivation to sell this property. Now, how that motivation actually translates to the best offer, I don't really know. Only they know. And so the best thing I can do is say, hey, here are the options. You help tell me which one's gonna make the most sense for you. There's three main offers that are gonna come up the most often. Now, before I give these to you, I'm just gonna share with you guys the rough split of how these are derived in our business. The first offer I'm gonna share with you makes up about 40% of the deals that we do. The second offer makes up about 40% of the deals that we do as well. And the last offer makes up about 20% of the deals that we do. But this third offer is very special because when it works, typically in terms of a cash on cash return, there is no better opportunity that I've seen than this third option. Option number one is very simple. That is the quick cash close. That is, hey, I'm offering you one simple price. That's the price that you net in your pocket because we cover realtor fees, closing costs, any liens, back taxes, you name it. We are gonna cover that. So that $21,000 you see on the purchase agreement, that's net to you. Now with that, typically we're offering an accelerated closing period. Call that 14 to 21 days. Now I always add a little asterisk here to let people know that it does come down to how fast the title company will allow us to close. Unfortunately, we're not in control of that. So typically we say 21 days or faster if the title company allows us. Now, because we're offering a, hey, we'll cover everything type offer and we're closing ultra quick, of course, that's gonna be on the deeper discounted end of the spectrum. Those offers typically fall somewhere between 40 and 60% of market value for the property. Now, the second offer is what we call a double close or a novation. All we're doing in that case is we're getting a signed contract with the seller that gives us essentially power of attorney rights to a lesser degree, but roughly, that allows us to list the property on the MLS. That also allows us to sign listing agreements on their behalf and things along those lines. And so in that situation, what we can do is we can contract a property. We can go market that property to find the highest and best offer for a retail buyer. They're gonna make that offer, and now we're gonna have a three-way transaction. We're gonna have an A, a B, and a C party. That A party is the seller. The B party is us. The C party is the new buyer that's coming in. Now, in a state that allows pass-through funding, what's beautiful about this situation is that the C party, their funds will pay the A party, so we'll pay off the original owner, and then the B party, us, will capture the spread in between. So let's imagine I contracted a property at $30,000. I'm using a double close agreement. That template that we use is really simple. We offer it inside of LIA. It's just a standard one-page template that we use for 99% of these deals. We go and take that property, we go list it with our realtor or list it on a third-party listing website. We find a new buyer. Let's say in this situation, they're willing to offer us $50,000. There's $20,000 of spread in between that you're able to capture on that deal. Now, this is different than an assignment because in an assignment, we're assigning the contract to a new buyer. The reason that's not really relevant here is that with a double close, it's what I call a B2C transaction. And what I mean is business to consumer. Because we're finding a consumer on the MLS, we're finding the highest bidder that will come in and typically pay more than an assignment, where that's more of a B2B transaction. I'm taking a piece of land, I'm assigning my contract, my right to buy that property to a new party, and more times than not, a consumer is not going to be interested in paying an assignment fee to receive my contract. Now, a new home builder or someone of that sort might, but more times than not, they're not going to pay top dollar. And so I see a lot of confusion between these two concepts. They are remarkably different. And out of all of my experimenting in 700 plus deals since 2019, double close is the clear winner. Now, there's a lot of things that you have to be aware of when double closing. I've made an entire video on that that's down below that'll link for you guys. I would recommend if you're thinking about using that strategy, that's a must watch. Now, the third option and the special secret sauce that we've been using for the last couple of years, it's really not that big of a secret, that's making owner finance offers to sellers. It's saying, hey, you've got a beautiful property. Let's imagine you don't need the capital quickly, and when you sell this property, you're gonna incur a ton of taxes because you've got a low basis in the property. So you're gonna get hit with short-term capital gains taxes because you bought it for $20,000 10 years ago, you're selling it for $1 million today. The IRS is gonna come after you and want a lot of those proceeds in between. Now with an owner finance offer, we can space out those payments. You'll be taxed at a completely different rate. And if you don't need the money today, typically you're gonna get a higher return through the interest that we're gonna pay you than you could in a traditional investment. So if there's not a ton of urgency there, this can be a great option where we put a down payment down, we make monthly payments, they get a higher price, they get interest on their money, they get to avoid getting hit with the extreme short-term capital gains, and it's truly a win-win for everyone. Now, when I'm making these offers, I'm not trying to go over the top and go too deep explaining all three of them. Typically what I'm gonna do is I'm just gonna make a range offer. I'm just gonna say we could pay somewhere between X and Y. Right? So start with a range when you're making your offer. Now this ties back into the first point about anchoring. In the beginning, when I'm anchoring, one of the things that I didn't reveal to you is that I'm anchoring with a range offer. I'm not gonna pigeonhole myself with one price. I'm gonna anchor with a range, and I'm gonna allow that to open up the discussion where the seller says, hey, tell me more about the difference in price here. Some of the difference in price is related to what we discover in our due diligence process about the property, and some of it's gonna come down to how we contract the deal. Now, one thing that I've learned after talking to thousands and thousands and thousands of sellers is you wanna avoid a lot of real estate jargon. So in this video, I've been using real estate buzzwords that I would not wanna use when I talk to a seller. When you talk to a seller, you wanna imagine that more than likely, this is the first real estate transaction that they've done maybe ever, or at least in a very long time. A lot of the sellers that we work with, maybe their partner acquired the property, or they inherited the property, or they bought it 30 years ago, and they just don't know that much about real estate. So when you're explaining the difference in your offers or the different contracting methods, you want to be very, very careful to not over-explain. Keep it very simple and focus on what are the pros and cons of each offer. And I think it's important to disclose what are the cons. Don't just focus on all of the upside of double closing or all of the upside on owner financing. Paint the full picture for all three of the offers and then let them decide. Okay guys, quick interruption. I wanna let you know that my objection handling holy grail document is entirely free for you guys. This is 6 years of hard-earned objection handling knowledge in the land business. You guys can download it as a PDF. I recommend printing it out. Mine is a mess because I use it all the time. Put it on your desk. I hope this helps you. Link is down below. So I've just thrown a ton of theory at you guys. So what I'm gonna do to kind of bring it back down to reality is I'm gonna give you an actual role play example of how this goes. So I'm gonna play both the acquisition manager or the land investor and the landowner. So here's exactly how I'd phrase this on the phone. Hey seller, I've reviewed your property based on the market. Roughly, I think I could pay somewhere between $9,000 to $13,500 for the property. Now I'm gonna pause. I'm gonna be dead silent. The seller's gonna come back and say, that's too low. I wanted at least $25,000. My response is, I hear you, but those comps have been sitting unsold for months. With me, you get cash in 30 days, no fees, no waiting. Now, obviously in the offer that I provided, there was a bit of a range. We could explore either a quick cash close option, or if maximizing top dollar is what most important to you, we could explore some options that would give us a little more time to work the property and potentially put a little more money in your pocket. How does that sound? Now the seller's gonna say, well, I might be interested at 20K. My response, well, another option that we could look at is potentially the team and I could do $15,000 for this property, but it would be on payments, which means steady monthly income for you with no headaches. Would that work better? If you guys want more examples of this, I also have a live training that we did with Ajay and Dennis out of LIA. I'll put that link for you down below. All right, guys, so let's just rewind the clock and make this really simple. Here's the formula. It's anchor, it's silence, it's facts, and it's options. Negotiating is not about manipulation or trying to pull the wool over someone's eyes. Negotiating is about fact finding. It's about trying to pull out the thread from a seller and see if there's any common ground. It's about trying to create win-win solutions. Now, that doesn't mean that every negotiation is going to work, and it doesn't mean that every single seller is going to be right for your business. What it means is when you find the right seller and there is common ground there, you'll be able to easily explain how the win-win situation works for both you and for them. If you guys want to take this even further, inside of LIA, we do live sales trainings, we do role playings, we do call reviews, we do everything under the sun to make you a pro at negotiations and acquisitions in this business. If you guys are interested in learning more about that, you can go over to landinvestor.co/apply, and I'll see you guys in the next video.
You're serious about flipping land for predictable profit, and you want to plug into the exact system our students are using to close their first deal or their next 10 deals, then tap the video right here. It's a free 15-minute strategy call where we're going to pull back the curtain and show you the exact LIA system that our students are using right now. We'll show you the entire process A to Z on how you can start landing deals in the next 90 days or less. Slots tend to fill up fast. Grab your spot now. And I look forward to showing you the exact LIA land flipping playbook that I've been using for the last 6 years and that nearly 500 other LIA members have used today. Click it and I'll see you inside.